Welcome to The Explainer, where we take complex topics and, well, make them simple.
So let's jump right into Chubb's Q3 2025 earnings. Their CEO, Evan Greenberg, kicked things off by saying, "We had a simply outstanding quarter." That's a pretty big claim, right? So let's dig in and see what the numbers have to say.
Okay, first up, the number that really jumps off the page, core operating earnings per share, a record $7.49.
Now, just to give you some context, that's a jaw-dropping 30.9% jump from the same time last year. I mean, that's the kind of growth that really makes Wall Street sit up and take notice.
So, where did that huge per share number come from? Well, it was fueled by record core operating income, which blew past $3 billion for the quarter. Just an absolutely huge result. All right, so the big question is, how in the world did they pull off these kinds of numbers? Let's get into it and decode what happened.
Okay, before we go any further, we got to talk about a key term in the insurance world, the combined ratio. Now, don't let the name scare you. Just think of it like a profitability score. It basically adds up all their costs, losses, expenses, the whole shebang, and compares it to the money they brought in from premiums. The magic number is 100%. Anything below that, and you're in the green. You're making a profit on your core business.
And this right here shows you just how well they're doing. Look at this. Chubb's Property and Casualty combined ratio got way better, dropping from 87.7% all the way down to a record 81.8%. That's a nearly 6-point drop. In the insurance game, that is a gigantic leap in profitability.
So yeah, a lower number is definitely what you want to see, but what caused it? What was the secret sauce behind that big improvement?
Well, a huge piece of the puzzle was, just plain old good fortune with the weather. Catastrophe losses plummeted. I mean, look at this. From $765 million last year all the way down to $285 million this quarter. A calmer storm season gave them a massive tailwind.
But hey, it wasn't just luck. You can't just chalk it all up to good weather. The company's two main profit engines were both absolutely firing on all cylinders. You've got their underwriting income, that's the profit they make just from selling insurance, which hit a record $2.26 billion. That's up 55%. And then on the other side, their investment income, the money they make by investing all those premiums, also hit a record at $1.65 billion. It's like the perfect storm of profitability.
Okay, so we see how they made the money. Now let's look at where. How does this all play out across their different businesses around the world?
And what you see is that this growth wasn't just in one little pocket. It was happening everywhere. Their main P&C business was up a really solid 5.3%, hitting almost $13 billion. But check out life insurance. It just exploded, up nearly 25%. That tells me they're likely making a big push into those long-term products, which is a pretty smart move.
And it's not just different types of insurance, it's also happening all over the globe. I mean, Chubb isn't just a US story. Their overseas business was up almost 10% overall. And look at this, double-digit growth in both Asia and Latin America. That kind of global footprint is so important, right? It spreads out the risk and opens up brand new markets.
And even right here at home in North America, you see that same smart diversification. Their personal insurance lines, things like your car and home insurance, actually grew faster than their commercial business. This shows a really nice balance in their strategy. They can win with regular people and with the big corporate clients.
Okay, so the numbers are incredible, but what's the feeling inside the company? What's the view from the C-suite?
Well, to put it mildly, they're feeling pretty good. The CEO, Evan Greenberg, he didn't mince words. He said, Chubb's fundamentals and our positioning are excellent, and our balance sheet has never been stronger. You just don't get a more confident, bullish statement from a CEO than that.
And look, they're not just saying it, they're proving it with their wallet. The company handed back over $1.6 billion to its shareholders, and that's just in this one quarter.
And we're not talking about a small gesture here. The lion's share of that, $1.23 billion, went to buying back their own stock. That's a huge vote of confidence. It shrinks the number of shares out there and makes each remaining one more valuable. Plus, they paid out another $385 million in dividends. It's management basically screaming, "We think our stock is the best place to put our money."
All right, let's zoom out and put a bow on this. What does it all mean? What are the big things you need to take away from this monster quarter for Chubb?
It really boils down to three things. One, record-breaking profits. And that was fueled by being great at their core job of underwriting and making smart investments. Two,
smart global growth. They're winning across different business lines and all over the world. And 3, a ton of confidence in what's next, which they're showing by sending a whole lot of cash back to investors.
So that really leaves us with the big question, right? They absolutely crushed it this quarter. But in a world that's always changing and full of surprises, can they keep this incredible momentum going?